On February 14th, Warren Buffett's Berkshire Hathaway filed their most recent 13F, which is a quarterly report filed by institutional investment managers. The report includes the names of securities held, the numbers of shares held, and the total value of the holdings. While it's always interesting to analyze what moves Buffett made, there was one move that caught everyone off guard. Buffett sold 86% of his position in Taiwan Semiconductor Manufacturing, stock ticker TSM. What made this such an interesting move is that Buffett had purchased this company around 3 months earlier. Buffett typically holds his stocks long term, so there has been tons of speculation over the past couple of months as to why he made this move. Fortunately for us, in a recent interview, Buffett explained why he made this move.
I do think that there is a danger there to some. I don't have any idea. There's actually a danger of seismic action. I mean, and where they're located, but that's a low probability, and
It's not often we see Buffett dance around a question the way we just saw in that interview, but I think it's still pretty clear what he's trying to say. The threat of China invading Taiwan is definitely something he took into consideration when dumping over $4 billion of TSM stock. And if we jump over to Seeking Alpha, which by the way, you can get 58% off at my link in the description, if we look at the past 5 years, we can see Taiwan Semiconductor Manufacturing has performed very well, up over 100%. They were even trading as high as $140 per share, but ever since that geopolitical tensions have begun to rise, we can say they traded as low as around $60 per share, so it halved its share price in a very short amount of time. It's back up to around $87.19 per share, which gives it a starting dividend yield of around 2.06%. So in this video, let's go ahead and jump into my valuation spreadsheet to see if we can find the intrinsic value of Taiwan Semiconductors. And we'll be looking at a few different valuations like always. And if you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and plug in the stock ticker here and hit enter, and you can see all of this data will automatically load in. And like I already mentioned, starting dividend yield of around 2.05%. Analysts currently have a target price of about $96.48. Institutional ownership very, very low, and a beta of 1.1. So you will see a little more volatility than normal. But let's go ahead and jump into our first valuation, which will be Graham's valuation. You can see the formula we're using right here. Now, for all of the assumptions you see in this valuation model, I'm actually going to be using analyst projections, and that's not something I do every single time, and I'll explain why just a little bit later in the video. But you can see we have our earnings per share listed here. We have our growth rate projection in line with analysts, very, very high growth rate projections. And then we have the current yield on AAA corporate bonds. And once we have all these variables plugged in, we put it in our formula and we come to an intrinsic value of $164.87 per share. That's very close to TSM's all-time high. Now let's go ahead and jump over to our discounted cash flow analysis. And again, you can see a growth rate projection for their free cash flow that is very, very high, 18%. So I applied that to the future free cash flows of the company and the terminal value, which is the sum of the future free cash flows past the year 2030. I then found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, subtracted their total debt to get the equity value, divided by shares outstanding, and I came to a discounted cash flow price per share of $90.36. Now let's jump over to our multiples valuation, and we have a lot of comparables, as you can see, some of them pretty popular. Let's go ahead and plug in INTC right here to give us another good comparison. But you can see we have Broadcom, we have Intel, Texas Instruments, and QCOM Qualcomm. We're taking their stock price, dividing by their earnings per share to get the price to earnings multiple. Now the average price to earnings multiple for these companies is sitting right at 17. So when we take that number and multiply it by TSM's earnings per share, we come to an intrinsic value of $109.29 per share. Now the last valuation model we will look at is the dividend discount model. And this is something I actually want to jump back over to Seeking Alpha and point out. If we jump over to the dividends and look at the dividend history and scroll down, look at the 10 years, you can see the dividends have been somewhat inconsistent. And if we look at the 3 years, we can see they fluctuate just a little bit on a quarterly basis, but overall the dividends have been growing, as you can see here. I just plugged in the yearly dividends since the quarterly dividends fluctuated so much, but still there is a little bit of growth. We saw a couple of drawbacks here, a slight drawback here overall. Overall, it is a growing dividend though. So moving forward, I'm projecting a growth rate of 5.5% for the dividends. And the reason I'm doing this, even though it is a little bit higher than we've seen, in prior years is because they're going to have so much free cash flow growth and so much earnings growth, and they have a nice low payout ratio. So with a 5.5% dividend growth rate and a discount rate of 8.5, we come to a dividend discount model price per share of around $64. So when we jump over to our output tab and average all four of our valuations together, you can see we come to an intrinsic value of $107.13. So with a 10% margin of safety, you can see our acceptable buy price is $96.41. And with a 20% margin of safety, it's getting very close to our acceptable buy price, right at $85.70. Now, like I mentioned earlier in the video, all of the assumptions for this valuation model are in line with analyst projections, but there's one huge problem, is that most of these don't take into account the geopolitical tensions that we're currently seeing, which is the reason that Warren Buffett sold out of this stock. So with that being said, if you were to take into account those geopolitical tensions, you're probably going to get growth rate projections much lower, which will completely mess up the valuation. It's really hard to project what that might look like because obviously there's so much uncertainty. But the good news about this is that Taiwan Semiconductors is taking steps to get rid of this geopolitical risk. We can see Taiwan Semiconductors recently announced that they're going to be building a new facility in Phoenix, Arizona, as a hedge against China. So obviously this is a big move for the company. It's still in the works, but this is definitely something they need to do moving forward for investors to be confident in this company. Now, I'm definitely not looking to add shares right now for the same reasons that Warren Buffett sold out of this stock. There's just too much geopolitical tension in that area right now, but this is a company to keep an eye on. If they are able to make the move to Phoenix, Arizona smoothly and get things up and running, this company has a ton of potential, so it's definitely something to have on your watch list. So there you go. There's a quick analysis on why Warren Buffett sold out of this stock and an analysis on this company. But go ahead and let me know what you think of this company in the comments down below. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.